Question: is this the fifth Elliott wave? Question: is this the fifth Elliott wave? We are a monthly chart of Ions Pharmaceutical Incorporation, Epic IONS, India Oscar November Sierra. This is a Russell 1000 components. On a monthly chart, I'm going to start counting waves. Alright, and we're going to use the reference point 2009, the point when the stock market began a bullish trend. Alright, as explained to traders before, we can use a reference point to help us polish our Elliott wave account. Alright, so if you were here, you will say, alright, probably this is the first Elliott wave. Alright, so you start your wave count. Here you say, okay, probably this is the first wave. Alright, so now the second wave probably is this one. Now we see a violation of the wave principle because the second wave has cancelled, okay, the first wave. When the second wave has cancelled the first wave, we must restart counting the wave. So I will remove, okay, my first and second wave here, and I will start counting wave. So here it is, we have a new first wave. Now we have, okay, the second wave, alright, and now, okay, is this the third Elliott wave? Alright, so we will say this is the third Elliott wave, and this is the fourth Elliott wave, and, okay, the fifth Elliott wave. The question that I have for traders today, question that I have for Elliott wave practitioners is this, the fifth Elliott wave. I'm going to call her on my chart the fifth Elliott wave. All right. Now, I want to see your comment in the comment section. All right. Is this the fifth Elliott wave? So you see, first wave, second wave, third wave, fourth wave, and the fifth wave. Is this the fifth Elliott wave? All right. We will try to clarify that question today. All right. So the first thing that we know is that looking at the characteristic of the fourth Elliott wave, you can see that it's quite deep, this fourth Elliott wave. So what I'm going to do, whenever you see a fourth wave that is too deep, you need to put a question mark on that fourth Elliott wave, especially when the third Elliott wave is prolonged. So it's the strongest phase of the bullish trend because we are in an uptrend. And now we see a fourth wave that came down all the way here. So I'm going to use Fibonacci retracement to see how far the fourth Elliott wave went down. It went down to the 78% Fibonacci retracement of the third Elliott wave. When I see that, okay, the bell will start ringing straight away, alerting me that, George, what kind of fourth wave it is, because this is not the characteristic of the fourth Elliott wave, a fourth wave that came down up to 78% Fibonacci retracement level of the third Elliott wave. This is an unusual circumstance. All right. Now the question is this the fifth Elliott wave? So by analyzing the characteristic of each wave, we will be able to correct our wave count. So as I see this now, I use my Fibonacci retracement level. As I explained to you before, one cannot count Elliott wave without using the Fibonacci retracement, the Fibonacci extensions. All right, very, very important. All right. So now that I see that the fourth Elliott wave went down to the 71% Fibonacci retracement level, the bell will start ringing, and I will say, no, I don't think so. So I'll start looking at the internal wave of this third Elliott wave here. But in fact, if you look carefully, okay, let's zoom into it. Look carefully, my friend. Look carefully, my friend. All right. The third Elliott wave, all right, is this one here. All right. Pay attention now. Pay attention. Third Elliott wave is from here all the way here. And, okay, the fourth wave is this one here, followed by, okay, the fifth wave. Feel free to disagree. But now the reason why I discount this as the fourth Elliott wave is because this went down all the way to 71% Fibonacci retracement level of the third Elliott wave. It doesn't add up. It does not add up. This is not the characteristic of the fourth Elliott wave. Our fourth Elliott wave is this one here, followed by the fifth wave. This is not, okay, the fifth Elliott wave. But as I show you on this chart, there are traders out there that will count the wave like 1, 2, 3, 4, 5. All right. So they say this is the fifth Elliott wave. But look, the fourth Elliott wave went down to 78% Fibonacci retracement level of the third Elliott wave. Though, look again, all right, look carefully, okay? So in fact, this is, look carefully, all right? So if you count, if you did it as I showed you at the beginning, you do like this, all right? If you count this as the third Elliott wave, and you use this one here as the fourth Elliott wave, though there is no violation of the wave principle, all right, you can see that, all right, everything is looking good, but you can see that this is not the fourth Elliott wave because this is not the characteristic of the fourth Elliott wave, all right? So the fourth Elliott wave is somewhere here, okay? It's a very shallow fourth Elliott wave, all right, followed by the fifth wave, all right. This is what we see here. Now, another thing that you can use, okay, so now you see this one here. There are another reason why I discount this one, okay. If I apply, you see now, we're going to apply again Fibonacci extension. So you are counting wave, you have to use Fibonacci retracement, Fibonacci extension, or this will help you to polish your wave analysis. So if I apply Fibonacci extension to the fifth wave, you can see that this one that we are calling first the fifth wave, our original fifth wave, went up to the 138.2% Fibonacci extension of my, okay, real fifth wave, all right? So now that I correct it, you see everything add up clearly. So in fact, what is happening here is a flat correction that began here. So this is the first part of the flat correction, and this is the second part of the flat correction. What I'm going to do, I'm going to color the flat correction into pink on this chart. So our original fifth wave is not, okay, the real fifth wave. By using Fibonacci extensions, it's now clear to me that in fact what we were calling first the fifth wave is a part of a flat correction. So we have the first wave, second wave, third wave, fourth wave, and the fifth wave. Now we apply Fibonacci extension to the fifth wave. We can see that this move up stop at 138.2% Fibonacci extension level of the fifth wave. So the trending phase, all right, is from here up to this point. Now a correction has begun. It's a flat correction. It's an expanded flat correction. This is the first part of the flat correction. This is the second part, an expanded flat correction. The price will form a higher high in comparison to the high of the fifth wave. This is an expanded flat correction. So at this point in time, what do we expect? We can forecast this correction now. So we know it's a flat correction. The flat correction is 1, 2, 3, 1, 2, 3. Here you cannot see clearly here. 1, 2, 3, 1, 2, 3 up. And then we see 1, okay. So this is quite, this one here, the flat correction is a very powerful, okay, wave pattern. That's why I say to traders, I feel sorry for traders who do not know, okay, how, okay, to identify, okay, the flat correction. So we will expect a 5 move down, okay. Here it is, 1, 2, 3, all right, 4, all right, 5, okay. So the flat correction is now completed. 1, 2, 3, 4. So now double retracement is the pink line followed by 1, 2, 3, 4, 5. Here it is. But now what's happening here? Why the price continue to go down? Now, one thing you need to understand, as we see now, you see the flat correction is completed here. You draw your horizontal line here. So you say priority to bullish signal, a bull, and priority to bearish signal below, and you will implement a top-down trading method. As you can see, trader did exactly that. The price start going up a bit. But look, we have to combine the technical analysis and the fundamental analysis. So though the flat correction is completed for this stock, IONS Pharmaceutical Incorporation, The professionals start buying here, but if the fundamentals are poor, the fundamentals are not solid, or if we have bearish economy news relating to this stock, the price may go up a bit and continue to go down, though our flat correction is completed here. That's why it's so important to draw the horizontal line, which is the warning line at the end of the flat correction. And, okay, price goes out. Now if the fundamental are weak and we receive a sell signal, we can continue to sell. Okay, here it is, the price break below. Finally, see now it break below, okay, the flat correction. Another tool that I can use to confirm that in fact my flat correction has ended here. You see the price, so we have a flat correction 1 to 3, went up to the zone of 138.2%, typical, okay, characteristic of the expanded flat correction. They probably go back above the high of the fifth wave in a zone of 138.2% Fibonacci extension level. Here, this is a beautiful, okay, a bearish trading setup. Look at the bearish candlestick back here, and then we'll start selling it. So it goes down, it rally up. We want to sell again here because we know that it's going to come down 5 times. It goes down. It rally again. Now we want to sell again. Now it reaches this level. We are positioning ourselves to buy because we know that the flat correction is completed. But one thing you need to understand, there are complex corrections, and the fundamental will always influence, okay, the technical analysis. So here, as the flat correction is completed, all right, you want to go to Google Finance, check the economy news, check the financial, perform Google Assist test. If the fundamentals are solid, the economy news are bullish, all right, the market environment is good, we may decide to buy here and continue to buy, and the stock will continue to go up. But here it is, it came down quickly, 1, 2, 3, 4, 5, completed here. I want to use now the moving average 50. I recorded a video today that I will post on our 24 Elliott Way YouTube channel. So that video will be posted before this one. So it's called How to Combine the Moving Average 50 and Wave Analysis like a Pro. How to combine moving average 50 and wave analysis like Pro. Check it out. So now I'm going to place on my chart, okay, another tool that I can use to validate my wave count to see exactly what is taking place here for this stock, Ions Pharmaceutical Incorporation, Epic, India, Oscar, November, Sierra, a Russell 1000 component. I'm going to place on my chart, okay, the simple moving average 50, all right? It's coming up, okay? So I'll color my moving average 50. I like to color it, normally before I used to color it in yellow, but traders say to me that yellow is not color that they can see on the chart, so now I want to use red. Normally I color the moving average 100 into red, and I like to color the moving average 50 into yellow. So here it is, the moving average 50. So remember, you see where the flat correction has ended? It has ended on the edge of the moving average 50. What I explained to traders in that video that I was talking about, how to combine moving average 50 and wave analysis, the first reaction of the correction will usually bring the price near the moving average 50. So you see here we count first wave, second wave, third wave, fourth wave, and the fifth wave. So the first reaction of the correction is what? Is this one. So the trending first has ended here. So this is the first reaction. You see where he brought the price? Near the moving average 50. So this is a bullish trading setup, which I explained to you already in that video. That's why I'm recommending that video to you, how to combine moving average 50 and wave analysis like a Pro. So came down near its first reaction. We bring the price very often near the moving average 50. Then this is a bullish trading setup, all right? And then the price rally up. So yeah, it was quite, just went boom, 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 up. And now if it continues, it breaks above this high. Once it goes above this high, the high of the fifth wave, the level that we will watch is 138.2% Fibonacci extension level, because we know that a correction is underway, and this is the first reaction of that correction. And now if the price goes to 138.2% Fibonacci extension level, we will be thinking of which pattern? The expanded flat correction. So now we will expect it again, 1, 2, 3, 4, 5, again near the moving at 50, where the pattern is completed. Though the pattern is completed, the fundamentals are not supporting this stock at all. Now this is what we call exaggeration, and the price continue to go down. The fundamentals are playing. So if this price continue to go down, which level we should watch now? We must now use another moving average. Moving averages. Yes, moving averages. Traders hate moving averages, but I love moving averages. They are powerful, but the reason why traders do not like moving averages is because they don't know how to use moving averages. All right, so I'm going to place on my chart moving average 200. The full corrective phase. In most cases, we bring the price back to the moving 200. Sometimes it may go a little bit below the moving average 200. Not always, my friend. It's not an exact science, my friend. All right, we are talking about probability. So 70% of the time, you will see that the full correction, the whole corrective phase, may end, somewhere near the 78.6% Fibonacci extension level, near the moving average at 200. So I'm placing on my chart moving average. You see where we are now? Near, you see, this is a moving average 200. Can you see? Moving average 200. So now the price continue to go down after the flat correction. Here it is near the moving average 200. Okay, I want to show you one more thing, so you also can start using the Elliott wave like a pro instead of just knowing it as a theory, but you may use it in a practical fashion, all right, like a pro. So I'm going to apply now Fibonacci, retracement to the trending phase. Stay with me. All right, now you see it's becoming clear to you now. So now I'm going to apply the Fibonacci retracement to the whole trending phase, not the correct. So the trending phase is from the origin of the first wave to the top of the fifth wave. Yes or no? All right. Here it is. You don't bring it all the way here. So from the beginning of the first wave to the top of the fifth wave. So now we apply Fibonacci retracement, and we want to highlight the level. Which level? 78% Fibonacci retracement level. Look at that. See how the professional trading. The 78% Fibonacci extension level is the blue line on this chart. So here again, so first time you see the first reaction, bring the price near the moving at 50. This is the bullish trading setup. Use the top-down trading method to trade it like a pro. Use the TST, WSYS, use your 8 trading system to swing trade this like a pro. If the signal fell, just come out. You can day trade this many days. You see me on the monthly chart. You know that this place is going to go up gently. Signal fell, come out. Do not assume anything, all right? So here, flat correction is completed here. Use a top-down trading method. Price D below the moving average 50. Well, if it's going down more, it's heading towards the moving average 200, near the level of 78% Fibonacci retracement level. This is about a question: is this the fifth Elliott wave? No, it is not the fifth Elliott wave. It's the second part of a flat correction. But I can assure you that many traders, when they were counting wave on this chart, they will have done something like this and say this is the third Elliott wave. So say 1, 2, 3. They call this fourth Elliott wave, which is in fact another violation of the characteristic of the fourth Elliott wave, because it went down up to 78% Fibonacci retracement level of the third Elliott wave. Now, if you see something like this, just think that this cannot be the fourth Elliott wave, all right? Unless it got a long tail. Sometimes you may see the price may go down and then we quickly go up. It may have a long tail. In that case, we may say, all right. But now, you see, it goes down 78% Fibonacci retracement level of the third Elliott wave. For me, I would discount it straight away that this is not the fourth Elliott wave. So then I will look again into this price action here. Where is the real fourth Elliott wave? Now it is clear to us that the real fourth Elliott wave is quite shallow. Fourth Elliott wave that we have here, a tiny little bit. This is matching the characteristic of the fourth Elliott wave, especially after an extended a third Elliott wave, and this is the fifth Elliott wave. Now a flat correction is underway, bringing the price, the first reaction, bringing the price near the moving average 50. Here it is, it's going up. Oh, now you go all the way to 138.2% Fibonacci extension level of the fifth wave. The first thing that is coming to our mind straight away, ladies and gentlemen, all right, so click, boom, flat correction is underway. It's going to come down 1, 2, 3, 4, 5. Now it's completed here. Now the fundamentals are not supporting. Okay, this stock price continue to go down. Where is it going? It's going, in most cases, not always. This is not an exact sign. It's heading towards the 78.6% Fibonacci extension level near the moving average 200. Do not assume that all stock will behave exactly the same way as this stock is behaving here, but you will notice that 70% of financial instruments will do exactly that, and you will be surprised. Here again, at this point in time, what do we say to traders? Priority to bullish signal above 1922 and priority to bearish signal below 1922. Price at a 78% Fibonacci retracement level near the moving average 200. So priority to bullish signal above, priority to bearish signal below. Some traders who are using the technical analysis like a sign will say definitely George is going to go back up. Well, the price can go back down and cancel the whole trend. So the whole trend, the price may go back to the beginning of the trend, which is in the here, right here, may go down all the way to the zone of $6.36. This is the end of this tutorial. Question: is this the fifth Elliott wave? No, it is not the fifth Elliott wave, as I demonstrated to you in this video. I hope you have learned something from this video also, and we put into use to make excellent wave a trading decision. I recommend to traders to watch that video, how to combine the moving average 50 and the wave analysis like a pole, and then they can also watch this video so they may improve or polish their wave accounts. We are the GSTW24 traders talking about question: is this the fifth Elliott wave? Happy trading to you all, and speak to you soon.